All right, live show. Y'all know how this go. So check this out. As you already know, this is your boy Marcel. Welcome to my channel. It is Marcel Griffin. I am the wealth mentor, and this is Wealthy Sibling. What we do, what man? We talk about everything about the sun, from entrepreneurship. All this is to help you change your family's money story. We break down investing, business, entrepreneurship, and the financial decisions that can help us create generational wealth. Like that's really what we do here. If you don't know, I'm your host, Marcellus Griffin, known as Marcel the Wealth Mentor. And today we're gonna be talking about financial infrastructures, especially for the black family, black led tech funds, and how they're helping to create $150 million towards home ownership and home reservation loans. Historically, there was a 1.27 billion merger in that, and then there's an initiative that wants to help 100,000 HBCU students graduate, right, with funded investment accounts. That is amazing. You already know we out here. As you know, I made money today, so I'm gonna look like money today. And you're not always gonna, like, the truth of the matter is, here's one thing that I really want to tell you now. You are not finna see me in polos all the time. You gonna see me in jewelry, because I will express you. You're going to see every facet of myself, right? I don't believe that getting to the money has a particular look, and even being an eight-figure professional necessarily has a particular look. Because I think what tailors people for people is, do you stay professional? Do you stay on your business however you dressed? Straight like that. But before we get into all the major stories and all that, we got to shout out our partnerships, man. First and foremost, if you're working on building and improving your credit, check out Kickoff. I love the Kickoff service. You can, they will help you create dispute letters. They will help you create and found trade lines to boost your credit, to report to all three of the credit bureaus. I love Kickoff, and it truly is a kickoff to a better financial future. No matter where you are starting, if you have the lowest of credit scores, do not worry. They're going to kick you off on the right start, man. Click the link. It will be in the description. Shout out to Top as a kickoff, man. And the favorite platform that we always talk about, Robinhood. So you got to refer a friend and refer a friend if you really want to grow generational wealth. So and especially when we talk about the plays, whenever you see me pull up the plays on the show, if you're watching on the YouTube, hit the subscribe button. But in general, like that's the Robinhood legend. I love the Robinhood platform for its simplicity. I really rock with them the long way. Their custodial accounts, their joint accounts for couples. I do believe couples should start building generational wealth. So yeah, open you up your brokerage account, man. Start investing today. Start learning how to trade tomorrow. All right. And then lastly, shout out to our partners and Monarch, right? So having a monarch or being a monarch means that you are leaving a legacy. And I think that not enough of the everyday people, especially the culture, talks about what is it like to leave financial legacy, right? So yes, I may be the first wealthy sibling, but I don't want to be the last. You feel me? So with that, anyone who is trying to get a clearer picture on their financial life, you got to check out Monarch Money. It's bringing your account, spending, budgeting. Like when I talk to people and they be like, bro, I want to trade. I want to start investing today, man. I want to make some money. Like I made, what did I make today? I made like $400 today, right? And this is passive or cash flow money. So for me, it's cash flow to fund all the endeavors in my business, and I don't really lose a step because it's not the main source of income. It is a second hand or cash flow base, right? So none of, and the beauty of this is why I talk about it. And it don't just have to be options. You can do it in futures, but in general, you gotta start with a budget so you even know like how you gonna be like, hey man, do you got $100 to invest? Man, take all that. If you sat down and drilled out your budget, which Monarch Buddy can help you do, you would know whether or not you got $100 to invest. Like you would know. So man, tap in with our lovely friends and partners at Monarch, man. The code will be in the description. But let's get into how I made this money today. You feel me? I'm feeling blessed, feeling great. Let's get to it. Google is paying me, right? Google is paying. Shout out to YouTube. Shout out to YouTube. Not only do they support the show, right, as a platform, get this lovely information to the public through me. But I traded, right? I traded, man. Google's paying me. But do I think it can reach 390? And I actually got out of that play today and I ran it back. And one thing I want to talk about, because I want to tell you this in real time. So I think one of the things that's different for me is when you see a lot of people talk about finance, I don't want to say wait till the end of the road, but they reach the mountaintop and then they come talk to you. I'm taking you on the journey of the mountaintop with me. So majority of things that you see me do or talk about, I'm doing in real time. Building my Roth in real time. Building my long-term portfolio in real time. Automating it to go into my long-term portfolio in real time. And every time automation happens, checking and investing it in real time. And trading Google in real time. So this that you're seeing, I made this money today. So got up to like $800, $900. This is a small account that I'm running because again, I'm moving the money, but traded Google, and the play that I profited on was a September 18th call, 385. Google took off within the past couple days from 330. I got in like 331 originally. Shot up, and this was something that this is why I also want to talk about, like when God gives you blessings and they tell you, don't look a gift horse in the mouth. This is that. So I proved myself right, which is Google. I believe that Google was going to get up or past 345, right? It had gotten to what I believe was a good level of resistance, because Google is a strong company, just like Microsoft. Microsoft took off today too, but it was at like 320. And so, like, this is the thing where it's like you don't really know the bottom. You can speculate, right? Outside some of the greats. Now, there's speculation that Google could have went lower, but I'm like, all right, 320. Let's see what the next 2 days turn out to be as a whole daily candle, and then let's get into if this is a confirmation or not, with all the talk of the geopolitical and any other things that are impacting the market, right? So with that, I want to give you context. So the market continues to balance long-term optimism around artificial intelligence with concern about spending, valuations, and interest rates. So what happened with Google in regards to this optimism with speculation was the Fed's decision. The positive, which is what I believe kept Google going, was that they didn't do the rate hike. Now, they didn't do the rate cut, which means that, they're cutting interest rates. They're relieving the overall economy when interest rates is cut. They didn't do that. Now, that Google would have been at 370 today. They did a rate cut. If they did a rate cut this week, Google is at 370 right now. Now it's not, which is the vice versa about they held rates, which means that they didn't decide to make any impact or any changes. They don't think that it's necessarily needed. Overall, the people on the board of the Federal Reserve. So they're like, all right, look, money coming in, the world is still moving, the world's still turning. Things aren't that hectic to where we need reprieve or relief. We can hold steady right now. Just y'all making y'all money, keep making y'all money. That's what they're saying. I said, all right, bet. Cool. That's a positive on today's end, since we're live. Google's like, okay, cool. They didn't do the rate hike. That means that overall they see a potential steadiness to the economy, right? Or to the money that's moving and flowing. Bad, wonderful. So when it comes to that, that's where you get Google getting up to 355 around closing. I think 355 was as high, took off. Boom. 800 in the pocket, took 50% profit up to be. And my original play, you could have kept it going, but I delved more into the money. So I got a 400, and I here's why I believe that Google will for sure, in my opinion, right? Here's my belief to where Google can its first hilltop. Google's first hilltop for me is like 375. Because my first hurdle for me was can get past 345. Boom. Rocket past 345. Held past 345. I said, oh yeah. We on that mission. It's 370, 375. Bad. And it ain't even the beginning of August. Now, there's a lot of other tensions into that. But going into that, Alphabet is directly at the center of this debate about the whole is AI making money, AI utilization, and it's dominating the digital advertising business and growing the cloud operation and a mass invested with its major investment in artificial intelligence. The trade I got is based mainly on Google is a foundational company that is continuously making money. People are streaming on YouTube, putting their podcast on YouTube, which is a revenue stream for Google itself, outside of Google still being the most credible search engine, even inside of ChatGPT. It's going to pull from the streamline of Google. Now, my current position live is, what's my current position? I believe it's the 400 call, but I don't want to misspoke, so I'll check real quick. Let's see. Yeah, it's a 400 call. So mine is a 400 call. I think my break even is like 4.2. But the 380 call, I was up 53%. You can't be like everybody be shooting for the 300%, and it's possible because I think the max I was like 168, 150. Like it was running. And if they would have cut rates, oh boy, I probably would have been up like a band for sure. I would have been up $1,000 for sure in this play, which isn't the first time for me. But yeah. So, in regards to options, the technicals is Google needs to rise about 15%. It had a great boost going into Monday or next week. It needs to held and at least move up $3 to $4 more in order to really like secure my position of it getting to 370 before September, right? Really, if it gets if it gets there before like the first week of August, because my exit at this point is actually 375. That's like my exit, 375. Uh, but remember, man, options can bring you profit, but what are you going to use the profit for? I'm using the profit that I make and create from options, that is my cash flow, to push and impact my community through the sponsorship, which is live. So whenever you do see this, if you are in the Chicagoland area, the Midwest area, and you are looking for a financial conference in August that you can go to, maybe you can't travel down south. It's all right. I got a place for you and I got a space for you, especially if you a teen, high school senior, a young adult that's transitioning and you are trying to find a way to pay your bills, find a way to gain a skill, find a window and glimpse into the entrepreneurial world to say, is this really for me? Man, can I meet millionaires? Can I be can I meet owners of billion-dollar companies who knows the biggest in the world, who collabs and build partnerships with the biggest in the world? It's called the Economics Wealth Summit. And because you know me, the Wealth Mentor, you have the opportunity to go for free. Yes, go for free. You don't need to pay for the ticket. I will meet you Saturday. You will pull up on me. We will enjoy the day. Only thing that you really got to do is fill out the form. So you fill out the form. Is we're taking a playbook out of Streaming You. We're gonna make it, you know, Wealth University. Just fill out the Google form, submit the video so I can actually personally review it, but also tag me. Make it public. Let everybody know that you want. Tag Ross. Tag Ross Mack. Let him know that you want to come to the Wealth Summit. I'm so serious. Tell him why you tell me that you want to come to the Wealth Summit, bro. That you've been thinking, striving, and dreaming of the possibility of becoming an investor, but you just didn't know where to start. And you see all of the greats through the computer screen, through your phone, but now they're gonna be sitting right in front of you to the point where you can ask them direct questions. I'm not people that you want to meet, you can ask them direct questions. If you ever been in real estate and you said, man, how do I become a real estate mogul? You can ask 9 to 5 the millionaire right in front of you. There's like 5 feet away. Only thing you got to do is tell me why. Tell me why do you want this opportunity? Tell me why you want to go to the Wealth Summit. I'm all for opportunity. I am one of the mentors that is the king of, hey, I will put this opportunity in your face to prove to me you want it. Because I believe that God blesses those with opportunities to change their life. Straight like that. But let's we talk for a minute. So let's get into the other great topics. Now our bearish case for Google's. I do want to talk about this just as a person who's an investor, who's a trader. Before we move on to the topics, there's always going to be a bearish case. It's just, are they checking off the boxes that will create this bearish scenario? The bearish scenario for Google is that by gaining more than 15%, that extraction is possible, but it's not guaranteed. It needs to move. But the AI spending, and if that is an improver saying that we're making money from spending all this money on AI, that's going to be lead to consolidation and possibly a reversal into bearish territory. Search competition, the regulatory risk, time decay. I don't have as much time as I want, but I'm closer in the money. So for me being closer in the money, as long as it gets to 375 money overall, is it going to be my home run? No, might be like second base, double base at bat. I'm okay with that because there's always going to be plays in the market. There's always I'm growing this account to flush out and create cash flow to build a better community, right? to build a platform, to build a space, to build a place to where you and us and we can create as a wealthy family, as a wealthy sibling, because I want to help create and build a foundation and be a part of the movement that helps create a million wealthy mentees. I say it all the time. I don't need to be the biggest, but I want to be the one that makes an impact. Straight like that. Management framework. And this is going to be my last thing. I have a conservative approach. Understand the approach that you want to have. Do you have a conservative approach? Do you have a balanced approach? Do you have an aggressive approach? Are you trying to make money right now and not for a long time? Are you trying to get in profit and take profit? Like you're not here to hit 1,000%. You okay with 100%? You know what I'm saying? You okay with the 75? Cool. Do you have a conservative approach? Where is your this is my solid rule and I'm not shaking from it approach, right? So, getting into it now. Talked about Robert. Talked about my Amazon probably went up today. I didn't get a chance to check it out. Here we go. All right. So, $150 million loan portfolio. Who would have thought that everyday people would come up with that, right? To help close the homeownership gap. So, it, there's people in this world. As long as there's people in this world, there's society that says, hey, you need to live somewhere, or people need a roof over their head. Well, TGUC Financial is a Black-led firm financial tech company that connects home ownership with contractors and financial institutions through its home improvement financing platform. The reported 150 million loan portfolio is intended to expand access to renovation property, because sometimes like people will say, hey, there's funds, like people will say there's funds for you to renovate the property and it barely covers cosmetic. Like it barely covers you maybe painting all the rooms in the house. Barely covers you painting the outside foundation of the house. It barely covers the small things, maybe replacing the knobs and screws and locks on all the cabinets and doors in the house, right? That's cosmetic work. Some loans barely cover that. Well, this place and this platform, which is TGUC Financial, allows eligible homeowners to seek financing while contractors are offering financing to the customers and receive payment following the project, right? So, why does home improvement matter? What does this mean? So, home improvement matters. Okay, here we go. Strategic improvement may increase safety, energy efficiency, living quality, resale value, rental property, rental potential, long-term equity, roof replacement, HVAC upgrades, electrical repairs. Now, productivity debt versus destructive debt. I like that. Productivity debt is debt that helps preserve and improve the asset, and it may increase its value or earning potential. That whole, you got to spend money, make money. If you got to add an extra $25,000 on top of the loan that you may have, that may even include the renovation to make sure that you can get another 75 to 100K once the renovation is done, that's productive debt. Destructive debt is debt that creates a long-term payment without producing enough financial or practical benefits. A renovation loan may be productive when it preserves structural damage and improves efficiency and increases property value, right? But it may become destructive when the borrower over improves the property and accepts an unfavorable payment loan, right? So let's say, man, they you on the interest and they taxing you on your payment, but you got the renovation done, but you won't be able to pull the money or sell the home to include the value of the renovation before you even got the time to pay the money back. So now the monthly payments kicking your ass. You know, put like it's banging down your back door. Even though you got the renovations done, you can't pull the money out. So there's that. Now, from this play in the loan portfolio, here's what happens. And a lot of people don't assess this, and especially a lot of homeowners don't assess this. The interest rate, the monthly payment, the loan term, the total repayment cost, the the prepayment rules, the contractor quality of like who it is you hiring, the project return, and the impact on energy savings. Being approved for a $50,000 loan does not mean borrowing the full 50,000 is financially wise. Just because you got said the loan was said yes to you, don't mean that that's you just spend it all up, right? Now with this loan portfolio, just help homeowners, right? They can access to finances, potentially improve their property. Contractors, they're going to receive their money so we can keep the project going. Financial institutions get validated and accredited um, clients that back the homeowner, and communities, right? Communities benefit because homes are improving. That means neighborhoods are improving. And especially when it comes to culture, neighborhoods need to improve, right? I believe all of that. Now, can a 1.27 billion black owned bank change access to capital with this merger? So, Op- Optus Financial Corporations and MF Bank Corp announced a planned merger that will combine these two historical black banking institutions. MF Bank was founded in 1907. Optimus Optus traces back to 1921, who's subject to regulatory shareholder approval upon the combination of these two institutions. But they operate across 10 locations from North and South Carolina, approximately holding assets up to 1.27 billion in assets, right? Now, what does this mean? Right? What does this level of assets, what does this merger mean, and how do they contain all these, right? How do you assess that? Well, they have mortgages, they have commercial loans, they have consumer loans, they have securities, they have investments, they have cash reserves. They put all that together, but the bank also has to manage, as banks, your deposits, capital requirements, credit losses, operating expenses, regulatory requirements, and liquidation. Here are the potential benefits to this. Large lending capacity. A larger bank may support more business loans, more community development projects can be assessed, right? Can be put into underserved or overlooked communities, right? Bigger bank, bigger money. Improved technology, cybersecurity, digital. Like when everything's in house, you only got to cover one house instead of two. And a great, what they call a greater uh, geographic or greater reach. 10 locations across 2 states. Hopefully they'll branch out to other states. But I think that just even that happening shows that the impact is possible. And I think that when you look at the grand scheme of how many banks do we own, that alone of who agree, if we do own them, agree to merger, agree to say we can get more done together than we could ever do apart. They are in and are the field of money, but they're not letting money determine what it is that they want to impact and who they want to impact. They not. They deal with money all day, and they said we're not going to let money get in the way when we can serve 20,000 zip codes that probably need year-round community development. We could be bank to fund that. Let's do it. Now, there's always risk to everything. Um, Integration. And I want to state this because they're gonna be like, well, no one talked about what are the potential risks if we wanted to do it. So I at least want to tell you, as your wealthy sibling. So these are always the potential risks. And I would talk to you just like you, my nephew or my family member. Trying to integrate in a potentially new system, employees, way of life, that whole thing. Um, this may reduce community connection because bigger banks become more corporate and less communal, is a suggestion. Larger credit risk because bigger loans can create bigger losses when underwriting isn't correct, they say. And then scale without impact is a larger institution does not automatically guarantee more lending in underserved communities. I'm not saying that that's what they will do. This is just a depiction, right? But your deposit matters. All that matters. Now, Melon and Money Foundation. Shout out to my brother Carter and shout out to my brother George. The Melon and Money Foundation invested in in invested in you initiative is designed to help HBCU students begin their wealth before entering the workforce. The initiative combines financial education, funded investing accounts, career readiness, mentorship, entrepreneur training, scholarships, internship pathways. I love it. Education, equity, and wealth is what they're about. The goal is to move students beyond learning definition and into actual ownership, right? Why do funding accounts matter? The experience. Students can learn how the markets move with their real capital in real time. Ownership. When you start saying, I own Google, I do. I realize I own Google in more than one way. Owning VOO, owning VTI, which is the total stock market, I own a fraction of Google versus actually having Google in my Roth. I own Google. It hit different when you say it out loud. The perspective is different. Now these are tools that not only are you using to create cash flow and capital, you can say, oh, I see why this is making me money. I see why this is improving the stock. I see why this company is held up for 20 plus years. They're good at what they do. They want to stick around. And if I can tell that they want to stick around by my approvals, they finna keep making me some money. So let's keep making me some money. It hit different. They learn about compound interest, and you can show this to your family impact. Students can bring financial knowledge back to the parents, siblings, community. Because most of the time, you got to see it. Like that's why I be like, bro, I made a check. Like if you want me to show you the play where I made 1,500 to 2 bands, which is the average American's paycheck. I don't say this more than once to brag. I say this to tell you, like, bro, I done it in real time. So when I say I know the power of the market in real time, while we talk now, I know the power of the market. I don't sit here and just stare at candles and swing and hope I hit. After a while, bro, it's not luck. You can get lucky, yes. But if you want to talk about my profit and loss statement and I've increased my overall salary and income from 5 to 15 grand probably every year with the like I'm like if you took away what I utilize the funds for to improve and hire people and give employment services, like $20,000-$30,000, bro. Up close to 10 this year. My physical year is about like close to like 10 grand that I build and dished out to services. So if I didn't pay for anything, I'd be sitting on a good amount of piece of change right now. Just I'd be cool. But again, this is not just about me. I do these things to show you that these things are real. That's why I do that. And that's why they do that, man. They're doing all these things to show you that it is possible. They've done it in real life. They took the time out. Shout out to Melon and Money, man, and the initiative to help HBCU students. Over 100,000 of them see the possibility of their finances. I appreciate that so much. Shout out to my brother George. Shout out to my brother Carter. Brick by brick, baby. Brick by brick. But I appreciate y'all, man. Hit the like button, hit the share button, subscribe. This is live. We appreciate you so much.